Elon Musk is worth over $200 billion right now. But there's one mistake, one single miscalculation, that could erase all of that wealth faster than you could imagine. And the terrifying part? It's already happened to the richest people in history. They made one wrong move, and everything vanished. Let me show you how. Let's go back to Germany in 1923. There was a man named Karl Helfrich, one of the wealthiest industrialists in the country. He owned factories, real estate, massive amounts of savings in German marks. On paper, he was worth millions, maybe tens of millions in today's money. He was set for life, or so he thought. But Germany's government was printing money like crazy to pay off war debts from World War I. The currency was being destroyed from the inside. At first, Karl didn't worry. He'd weathered economic storms before. His wealth was substantial. But then the printing accelerated. In January 1923, a loaf of bread cost 250 marks. By November, that same loaf cost 200 billion marks. His entire fortune, held primarily in German marks and bonds denominated in marks, became worthless in less than a year. A wheelbarrow full of cash couldn't buy a newspaper. People were burning money because it was cheaper than buying firewood. Karl Helfrich went from being one of Germany's richest men to having essentially nothing, not because he made a bad business decision, but because he kept his wealth in a currency that collapsed. Now let me tell you about John Law. In the early 1700s, he was running France's economy and had created something called the Mississippi Company. It was one of history's first megacorporations, and Law owned a massive stake in it. At the peak, he was potentially the richest man in the world. The company's stock kept rising, and everyone in France wanted in. Law was a genius, they said. He'd revolutionize finance. But the whole thing was built on hype and borrowed money. The Mississippi Company's actual business, developing French territories in America, wasn't generating anywhere near the profits that justified the stock price. When people started asking questions and trying to cash out, the bubble popped. Within months, the stock went from astronomical heights to basically zero. Law went from unimaginable wealth to fleeing France in disguise to avoid angry mobs. His mistake? He believed his own hype and kept all his wealth tied up in one asset that turned out to be overvalued. So, what does this have to do with Elon Musk? Here's the thing. Almost all of Musk's wealth is tied up in Tesla stock. We're talking about roughly 75% of his net worth in a single company. Now, Tesla is an amazing company that's revolutionized electric vehicles. But here's what you need to understand. Tesla's stock price isn't based just on how many cars they sell. It's based on expectations, on hype, on belief in future growth. Tesla's market value is bigger than the next several car companies combined, even though they produce way fewer vehicles. Why? Because investors are betting on the future, on full self-driving, on energy products, on Musk's vision. That stock price is built on confidence and momentum. And confidence is a fragile thing. Here's a mistake that could destroy Musk's wealth. Over-leverage combined with loss of confidence. Musk has borrowed billions of dollars using his Tesla shares as collateral. This is called margin debt. It's a common move for billionaires because it lets them access cash without selling stock and triggering taxes. But it's also incredibly risky. Here's how it works. Let's say Tesla stock is at $800 per share, and Musk borrows money using those shares as collateral. The bank says fine. If the stock drops to a certain level, say $400, you need to either pay back the loan or give us more collateral. That's called a margin call. If Musk can't meet that margin call, the bank can force him to sell shares to cover the debt. And when a major shareholder starts selling huge amounts of stock, other investors panic and sell too. The price drops further, triggering more forced selling. It becomes a death spiral. We saw a preview of this in late 2022 when Tesla's stock dropped about 65% in a few months. Musk's net worth fell by over $100 billion. He went from richest person alive to second place, then kept falling. Now, the stock recovered, but that crash showed how fast paper wealth can evaporate. If that drop had continued, if it had triggered forced selling of his shares, we could have witnessed one of history's greatest wealth destructions in real time. And it's not just about borrowing. It's about concentration risk. Having all your eggs in one basket works great when that basket is going up. But if something happens to that one company, a major recall, a new competitor, a shift in consumer preference, government regulation, anything that causes investors to lose faith in Tesla's sky-high valuation, the wealth disappears. Not because Tesla stops existing, but because the stock price comes back down to earth. Think about it this way. If Tesla's valuation dropped to match traditional car companies based on revenue and profit, the stock could fall 70 or 80%. That's not saying it will, but it's possible if market sentiment shifts. And if that happened while Musk had billions in loans against those shares, we'd watch one of the richest people in history potentially lose almost everything. The same pattern applies to anyone with concentrated wealth in a single volatile asset. The crypto billionaires who were worth tens of billions when Bitcoin hit $60,000, then lost most of it when it crashed. The dot-com millionaires who had $50 million on paper in 1999 and were broke by 2001 because they never diversified. The real estate moguls who were kings of the world in 2007 and bankrupt by 2009 because they'd borrowed too much against their properties. The mistake isn't being successful or building wealth. The mistake is believing that paper wealth is the same as real wealth and not protecting yourself against catastrophic scenarios. When your net worth is tied to a stock price that moves 5 or 10% in a single day, you're essentially sitting on a powder keg. Most days, nothing happens. But all it takes is one spark, one bad quarter, one investigation, one loss of confidence, and the whole thing can blow up. Now, does this mean Musk will become poor? No. He's diversified more than people realize. He owns SpaceX, which is private and valuable. He's got other assets. And he's smart enough to have some protection in place. But the theoretical path from richest person alive to massive wealth destruction exists, and it's the same path that's destroyed fortunes throughout history. The lesson here isn't about Elon Musk specifically. It's about understanding that extreme wealth built on paper assets and leverage is inherently fragile. It can create billionaires overnight, and it can destroy them just as fast. The richest people in history who stayed rich were the ones who recognized as danger and diversified, who didn't believe their own hype, who protected themselves against catastrophic scenarios even when everything seemed perfect. Because here's the truth that history teaches us over and over. The moment you think you're invincible is usually right before you're destroyed. The wealthiest people who lost everything weren't stupid. Paper wealth isn't real until you convert it into something stable. And by the time they realize their error, it was already too late.